Hi guys, welcome to my channel. My name is Hugo, and today we're going to see what's going to be the best stocks for this week. So stay around. So this week we're going to start with a UK stock, BP.l, which is a British petroleum. They have a dividend yield of 3.96%. This is actually one of the stocks that I have on my portfolio for a long time. And they pay quarterly February, May, August, and November. They are undervalued in 17.3%. The ex-dividend that is on the 17th of February, so this actually is going to be the only stock that you can buy this week, because all others are going to be on the 14th today. So you won't have time to well, you can buy, but you won't have time enough. You need at least 2 or 3 days so it can process your order, so you can receive the dividends from those stocks. In terms of financial health, we have 2Gs. They have around 96 billion on assets and 80 billion on liabilities, and with a lot of cash flow. The market sentiment, we have a hold, and the future growth is only 3.5%. But comparing with the past performance, we have a good growth projection for the past performance, which was minus 24.9%. We're going to have more stocks for this week, and we have more like Chevron and others, Shell, for example, which is a good stock as well. But this one for me is one of the best stocks, because the 3.96% of dividend yield is how much you're going to receive. If you're going to buy stocks from US market, you're going to pay 30% of the of that dividend yield. Therefore, the dividend yield is not going to be 5%; it's going to be like 4 or 3%. So this is actually how much you're going to receive, and you're going to give you an example on Chevron. The next ticker is going to be Chevron with the ticker CVX. Chevron Corporation, they have a dividend yield of 4.18%, but as I mentioned before, in terms of this actually is going to be lower than the BP.l for one simple reason, because we need to take 30% off the 4.18%, because it's the tax that we're going to pay, which on BP that hasn't happened. They pay quarterly February, May, August, and November, the same as British Petroleum. They are undervalued in 6.2%. 6.2% is not enough leg room for us to be undervalued, although it could be a good investment. But bear in mind that the future growth is going to be only minus 0.7%. If we, with a bit of luck, the stock may increase, and has been increasing in the past few weeks. Actually, I sold on the top highs in the past January, and they still continue to grow. They went down a bit, but then they recover back. The ex-dividend date is going to be on the 15th of February, so it's going to be tomorrow, so you won't have time to buy this one, or at least to get the dividends from this stock. I do recommend you to put on your watch list. The financial health is a G with 32 billion on assets and 25 billion on liabilities. We have a market sentiment of a buy, and again, as I mentioned, the future growth is minus 0.7%. So we'll cover the dividend. Yes, it will cover the dividend. We may get some increase as well. We still don't know when this deal with Exxon and Chevron, the merge of those two companies, will happen. There was big talks in the past year. The stock increased quite heavily, and that was also one of the reasons why I bought this stock. Now I've sold. We didn't have any more communication regarding that merge, if that's going to happen or not. But it's one of the things that you need to have your eye open on Chevron and on Exxon, because they also, if both can increase due to the merge that may happen, when we still don't know. The next ticker, it's the SCCO, Southern Copper Corporation. So this have a dividend yield of 5.90%. They pay quarterly February, May, August, and November. They are overvalued in 59.4. So this for me is a no-no stock, because it's really high overvalued, and we need to have in consideration as well the future growth is minus 0.9%. The stock is quite high. It needs to go down, although I don't see too much of growth in the copper industry. That's why the future growth is minus 6.9, with a past performance of 16.3%. Was good, but this is a really risky stock. I do remember it was like the Tesla stock that was 300% overvalued and then went down quite a lot. So I don't recommend this. You can have on your watch list to see what's happening with the stock if it goes down. But being overvalued in 59%, for me, it's not a stock to invest it now. although the dividend yield is quite attractive, but we have more stocks in this industry with high dividend yields and probably with better value than this one. So the next ticker, it's the ENB, Embrine Inc. This is a stock on the energy sector, oil storage and gas. They have a dividend yield of 6.29%. They pay quarterly February, May, August, and November. They are undervalued 27%. The ex-dividend date is on the 14th of February, so we won't have time to buy this one. So I do recommend you to have into your watch list and maybe buy the next quarter around May, before that probably, because May probably will increase a bit, and the same thing goes to the other stocks that I already mentioned. The financial health is 2Bs in terms of assets. So we have 8 billion on assets, and in terms of liabilities around 15 billion. They are not great in terms of cash flow, and we still have a market sentiment of a hold. The future growth is 7%, and the past performance is 22.2%. This could be an interesting stock due to the dividend yield, but the financial health make the stock a bit risky due to the financial health that they have. There's a big gap between assets and liabilities, therefore they have 2Bs. They don't have too much cash flow, beside all other indicators being quite well. Let's see what's going to happen. It's not worth it to buy it now to receive the dividends for the stock. I'll do recommend you to put on your watch list and see what's going to be the progression and the growth of this company, and if the financial health will recover on the next upcoming quarter at least. The last but not least, for this month we're going to have ARR, Armor Resident REITs. It's a stock that I have on my portfolio as well. They pay 13.29%. This is due to the stock went down quite a lot during the past month, and the ex-dividend date is going to be on the 14th of February. You won't be able to. I think you can buy it now for the next month, but since it's monthly, you don't need to wait a quarter. That's why I like monthly stocks, due to that characteristic. This week the market went down a lot, around 1.225%. The only market that recovered here was the Chinese market and the UK market with 1.5% and 0.72%. All the Nasdaq and SP500 went down quite a lot, with the Nasdaq, with the biggest companies went down, and we're going to see right in a few moments. The biggest ones went down quite a lot, and the Nasdaq was quite affected. It also affected my portfolio, but the having stocks, UK stocks on my portfolio, allow me not to suffer as much as the decline of the US market, and that's why I do recommend always to have some diversification on your portfolio, which is quite important, and this is one of the reasons why. This week by sectors, we did suffer a lot on all sectors except the financial sector and the energy sector, which went up. So we already saw BP and Chevron, they went up quite a lot, if you managed to see those graphs. The biggest impacted markets was the real estate, the utilities, and the semiconductors, and we're going to see now which companies were affected quite a lot on this by seeing the heat map. So this week we have everything in reds. As you can see, the electronic services were quite affected, with Microsoft with minus 3.35%, Google with minus 5.48%, Facebook or Metaverse with 6.73%. Bear in mind it went down so far since the previous month around 24% almost. Apple as well, Amazon with minus 2%, Walmart with 3.51%. So we have here the biggest top companies with being really impacting during this week. Costco as well. We have Nvidia with a positive trend, but not much. Intel, as I mentioned, the semiconductor was quite affected. We have here the Qualcomm with minus 6.69%, and Avigio with minus 1.57%, which is one of the stocks that I have on my portfolio as well. The health technology with G&G with minus 2%. Pfizer quite affected this week with minus 5.42%. Only the positive here was ABBV, which is also one of the stocks that I have on my portfolio. We have on the consumer durables, we have Tesla with minus 5.77%. So all the growth stocks were quite affected this week. On the energy sector, the only positive was actually Chevron, and the most affected was Shaw Mobile with minus 3.5%. Quite interesting stocks to see if they are still overvalued or more undervalued than actually Chevron. I do recommend to buy one of those or BP, as I mentioned today. And on the financial sector, we have Berkshire Hathaway with an increase of 1.19%. Actually, I do have Berkshire Hathaway on my portfolio, JP Morgan with 1.15%, and all MasterCards and Visa with 1.69 and 2.96% with a big decrease. So we did have here a big impact on those two stocks, but in the overall, we had a positive trend sector, and being definitely the most impacted, the technology services with almost everything in red. We don't have anything positive here. So I do think that the next week we may see some positive trend. Let's see what's going to happen. Let's do some analysis now on the markets. So let's see what's going to happen for the next week on the SP500 and on the Bitcoin. So it seems that the trend is going to continue to be negative. We may see a fall of another 12%, being the resistance around the 4600s. We may reach the 4800, but it's not going to be. I don't think that that's going to happen. We may continue to fall for the next week, at least until the end of February. I think that's going to happen, and we may reach the 39. So I do recommend you to buy stocks like SQQ, which will grow on when the market is negative. It's going to be one of the stocks that I'm going to invest actually. In terms of the RSI, it's going to continue bearish trends, and will call further for a downside. So we may reach the 30s. So because we are being overbought at the moment, and this may continue a downtrend. So based on this fact, we may continue to see a bearish market for the next upcoming week. So I have some money in balance, so we can reinvest in the stocks that are going to be in the dip. In terms of the Bitcoin, we're going to have a positive trends, or at least until the end of the day. Actually, one of the things that I saw during this past week was the market trends, especially the Nasdaq went down quite a lot, and we saw a positive trend on the Bitcoin. Probably the same thing is going to happen for this week. We may continue to see a trend on the Bitcoin. We may see some shifts from some stocks on the SP500 to the crypto, and therefore the analysis that we're seeing here, we may see a positive trend for the next upcoming week. So we may see some rise of around 1300 to 5300 pips as a rebound to pointing to the 48,000. In terms of the RSI, we break above the 38,000, and with a positive signal that was open as a path for the 44,000 for the next week. We may see this going down back to the 30, and that will serve as a rebound to going up again for the 38,000. So I hope you enjoyed the tips for this week. Don't forget to hit the subscribe button and the like. That will help me a lot with the YouTube algorithm. It's really hard to reach the 1,000 subscribers, and that's what I'm aiming for. And if you have some questions, please leave a comment, and I'll try to reply to you as soon as possible. Once again, guys, thank you, cheers, and see you next week.